Hello, traders. It's 8:01 a.m. Chicago time on Friday, the 21st of February, 2020. This is episode number 1697. Happy Friday, everyone. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, yesterday's move in the indices, especially S&P, was definitely not foreseen. Actually, not foreseen by anyone, as far as I can tell. I can frankly say that I did not find a news event that would entail that much selling. Essentially, from the high to the low, the S&P had a move that would cover a week's range, a week's entire range, and did so in three 15-minute bars. And then the bounce broke through the mid and pushed through a key area at 3370 and moved back into balance, moved back into the MC point of control. I'll go over that. I can't say that I'm seeing or I saw anything that would elicit that, but it behaved a lot like a correction. It behaved like a news event, behaved like a correction. It was indiscriminate in sellers were indiscriminate in their in the prices that they were taking, and volume was quite high for that time. For that period of the day, volume was about 6 times the average. So it was a meaningful move, which brought in some welcome volatility. We saw the VIX pop, we saw the underlying move with it, but everything kind of recovered. Um, Pretty much, on in the other products, for example, the Russell closed just just a point and a half away from the prior day. And the S&P closed lower. The S&P closed down 17 points. So it remains to be seen what that is. It looks to me like there was a seller stepping in to remove some risk or something, and it just precipitated into a bunch of stops running. Anyway, welcome volatility. Of course, that same volatility just completely collapsed shortly after. We started out with the VIX at 14.47, 14.5, something like that. On that move, it went as high as 17, and it moved back to 15.35. So very, very short-lived. I know many who probably took the opposite side of that, as we're kind of in a bull market. We're trained to come in and just buy the dip every time, buy key support areas, and that certainly was painful to hold on to yesterday. Hopefully, nobody here got hurt very badly, but these kinds of things are what stops are made for. Coming into today, there is a slight risk-off sentiment. Gold's even higher. Gold popping strong this morning, up 1.38% versus yesterday's settlement, trading at $1,642.50, up $22 since yesterday. This is really kind of feeds the frenzy or feeds this news cycle in terms of, hey, who's buying this gold and why did the market drop like this? The bonds are up 29 ticks, which is quite a bit for the bonds. The British pound is up. The 10-year notes are up 9.5 ticks. Crude oil's off 66 cents, trading at 53.22. Crude was one that dropped, actually had a pop on inventories, then dropped, and then came back and recovered and closed within 2 cents of Wednesday's close. Made a complete recovery. And that's where we stand this morning. It is a risk-off sentiment. I am leaning my overall bias, given the context that we're in. Given the context that we're in, we basically uh, we basically uh, need. I'm coming in looking at selling today. I'm coming in with a selling bias today. And it's just who knows when this activates some sort of a rescue effort by the Fed or the U.S. Treasury or whatever. But technically speaking, looking at where we stand, it is certainly looking to the short side this morning. Let's take a look at what's ahead for today. This morning didn't have any high level or high impact releases. Quite a bit came out of the Eurozone, core inflation, and so on, and existing home sales are due at a half hour after the open. Also, we have market manufacturing PMI due 15 minutes after the open, and we have four Fed speakers this session. At 10 o'clock, we have Fed's Bostic and Fed's Brainard, and then at 1:30 we have Fed's Clarita and Fed's Mester. This is where we stand in terms of what's scheduled. I expect that the news feed is going to squawk a fair amount today. We'll see. There isn't anything obvious out there. I know that the numbers for the COVID 19 virus, there's news that's going around that the numbers are kind of jumping higher and more cases showing up in South Korea and so on. But I'm not sure if the market will respond to that. So let's move on to our review. Yesterday, the key areas I was looking to interact with the market are marked in those yellow X's. The primary scenario was for a push into 33.85.86, which is the value low of the prior session, and I'm looking to go short. This is the primary scenario here, scenario one. This scenario ended up pushing to the next area up, which was 33.90. We have a double top, a weak high. I'm going to show you this. This is yesterday's profile, market profile right here, and you can see there are two TPOs at the high yesterday at 33.89 and a quarter, right up against that key 33.90 area. That's this X here. So the market ended up pushing and rolling over at the 90 instead of the 89. And then from there, I was looking for the 70 as a key area, 73.70. Obviously, the turn at the 89.90 worked out pretty good, and we ended up rolling over. We didn't turn at the value low, which coincides with the prior all-time high at 84.75, this 85.86 area. But it did push higher, of course, by about 5 points, but we ended up rolling over and pushing into the 70 and actually dropping quite a bit. Here's what actually happened. So we have a bit of a scenario one yesterday, except it was really, really exaggerated. There's no way to predict the market's going to do what it's going to do. The goal is to have a plan for when it does play out. And so here's the 89 right here, rolls over, and we have this big move down all the way to 39 and a quarter. Again, there's just no way to predict that we're going to have a multi-sigma move yesterday. And then the key pullback areas yesterday were 58.75 and 65 in the 65 area, which was also the mid of the session. And it kind of rotated a little bit in those areas, and it ended up squeezing up. And what we have yesterday is a trend style profile. The value area is not valid. We ended up coming right back to the MC point of control, which is this black line from this composite right here. And holding steady and basically holding in this area. From there, the overnight session opens up and continues to the sellers continue to step in. But yesterday, again, it ended up turning in one of the anticipated reaction areas. That's the stock zone. But the drop was very fast and was difficult to jump on. Looking at the overnight session, we reopen and we immediately roll over. Again, there was a fair amount of news that came out of Asia for the coronavirus, the novel coronavirus, which kind of coincided with this drop, and then it basically continued down. But we ended up yesterday with a fairly well distributed profile and evenly distributed profile. And what we take from yesterday is the point of control is right here. The overnight point of control is at 57 and a quarter. But then so is the VWAP, the overnight VWAP, and the overnight mid. The blue and the cyan line are on top of each other. What is this described? Those of you who've been around for a while will immediately detect that this describes a balance, a state of balance, a balanced situation as we come into the session, and we're balancing around that 3350 zone in near that 3350 zone. So this is where the excess begins. The excess yesterday, meaning if we start to fall below 3348, it is likely to test this low here at 39 and a quarter. So I will not be looking to buy anything below this 48 area. If it does get below here, I expect that it's likely to trade that entire excess low that was put in during the drop. In other words, if the market was strong and had buyers in it, we would expect it not to come down into this area at all. We'd expect them to buy against the high volume nodes and sell against the high volume nodes. So this morning, watching very carefully this 56 half, 56, 57 quarter area, just paying very close attention to that. The volume is high in the overnight session, 473,000, and we're coming into a balance in the lower end of the range. The market overnight stayed below the mid of yesterday, so this is what's feeding into the downside bias. Okay. Now I want to remind you that today is Like Friday. Please hit the like button when you get a chance, and then let's jump right into what we're expecting for this session real quick. All right, so this morning, looking for the overnight inventory to be short, expecting a response higher, right? Just like yesterday, expecting a response higher, pushing into 64, 65. And then I'm looking for it to sell through and start moving lower. The overnight session's in balance. I expect it to chop around here quite a bit, consolidate, and then eventually I'm looking for a continuation of yesterday's range with the overnight stat at 45. I'm looking for that as the key target below this area. 47.5, 40, 45 is a key target. I'm looking for a continuation coming into the weekend, a continuation of the selling. There's got to be some rattled cages here, some nervous longs, heavy longs, and I would expect that these will balance out into the weekend. Alternatively, an open auction that moves down, moves into 47, 48 area, pokes through, impulses up, consolidates in the middle, and then just holds steady in the middle for a potential tag of the overnight stat. But I'm looking for it to be an inside day on the second scenario. A dip early, and then the market starts to form a trend up as it has done in the past. Really hard to predict what it's likely to do here because there appears to be a shift. There appears to be a shift in the overall market here on this move, especially since it's not driven. It's driven by some action other than some news event And to me, I take that more serious. A news event would tell me that we're likely to be back at the SOC. We did leave a week high behind at the 89 yesterday, but if this was news, we would likely have finished way up there inside of the IB, probably closer to 80, 85 than where we ended up. So I'm looking for the market to really seek those buyers again by extending lower. Okay, I'll leave you with that. Good luck today, and I'll catch you Monday morning. Hopefully, you gain something today. Take care.